What's up, everybody? Welcome to Everything Real Estate Podcast, episode 18. We have a special guest, Wes Grant, heavy hitter in the sub 2 community. You want to introduce yourself, brother?
Absolutely. Good morning, Justin. Good morning, everybody else. My name is Wes Grant. I live out in Scottsdale, Arizona, part of the sub 2 community and a couple other different communities. And yeah, man, excited to be here to talk about some private money.
Right. So what led you to become a private money lender, and how did you get started in that profession?
Oh, so that's a good question. So going back, I started real estate investing when I was 19, and I didn't know what it was called at the time, but I was house hacking, right, out in California. And so sometimes when young people talk to me about how they should start, I always tell them, like, hey man, look into house hacking. Like, I was able to buy my first house at 19. I rented out the other rooms. I lived for free, and then you rinse and repeat, right? And that helped me.
Right.
Now I'm 41. It took time, and I didn't know a lot. I didn't know a lot back then versus what I know now. And if I had the knowledge that I have now back then, I mean, I would be. I don't even know if I'd be on this podcast, to be honest with you. I might just be on my yacht somewhere. But that's the place to start, man. And so what happened is we made some money through real estate that way through the years. And about 11 years ago, my mother-in-law approached us because she knew we were just sitting on capital in the bank. We were big stock market people, but we were also like, oh, we got to have, this big emergency fund, this big emergency fund. And like, they had the wrong mindset, like the save, you can't save yourself into wealth. But back then we just didn't know, right? My wife's an attorney. I was a police officer. We were still just kind of W-2 mindset. And, my mother-in-law approached us and said, hey, we know you're sitting on this money. We've been doing this lending to a hard money lender. So essentially they were going through a hard money lender broker. And what he was doing was he was lending on fix and flips here in Arizona, funny enough. And she asked us if something we'd be interested in. And after some discussion, we realized, like, hey, money in the bank, we can make more money on it, like, let's do it. And so we just started going through a broker to start with. Like I said, he was lending on a fix and flips here. So we learned a lot through that process. Had a lot of great deals, made a lot of extra money doing that. I mean, extra money. We were making 10%, which is great. It was beating our stock market returns, especially with, fees and taxes that come in from the stock market that really kind of crushes your compounding effect. But that's how it all started. Thanks to a family member connection, right? And then what ended up happening is we started doing it on our own as we learned. And then we got deeper into it. We made a lot of mistakes. We had a lot of successes. And then realized that, what, we don't have to just lend on fix and flips. We can lend on all sorts of things, right? Long-term buy and holds, short-term rentals, mid-term rentals. And as I joined the sub 2 community in June of 22, my knowledge and my awareness of what was out there really kind of exploded. And, I've done a lot of lends, whether it be short-term, long-term, in the last year and a half. It's kind of crazy. And made a lot more mistakes, which is great because I'm happy that I can make mistakes that I can tolerate those losses on. Like, I don't want to lose money, right? That's never the goal. But I've come away with some incredible lessons that's going to then help me not make the same mistake at a larger scale later, right? Like, if I lose $30,000 on something, that's a lot of money, and that sucks. And the old money mindset, Wes, like, that would be like devastating to me. Now money mindset, Wes, it's like, wow, that was a $30,000 masterclass on how to not do this again, right? Now I can move forward and not do it with like $100,000 or $200,000, right? And not make that same mistake. Then I can also come out and I can help other people who are interested in lending, right? Like me and Melissa Palmer do a once a month private money lending due diligence class where we're just talking about like brief overview of some things to consider before you lend, due diligence on the deal, due diligence on the person. And that's really just coming from my years of experience and my years of mistakes, right? And so yeah, that's how I got into it. That's kind of where we're at now. We have a set group of people that are repeat borrowers that we lend to, and then kind of branched off for the last, I don't know, year and a few months. Thanks to like our friend Abraham Gray, I kind of dove deep into the business acquisition world, and so that's where I'm focusing a lot of my time and energy right now as well.
Right. What kind of businesses are you looking at?
So it started with me and some other partners looking to actually acquire our own companies, and we did that, and we bought some that were too small, which we realized that the amount of work that goes into a smaller company is actually almost sometimes more work than a bigger company, because the bigger company already has some sort of system and process in place that made them be as successful as they are, whereas a smaller company doesn't have those. So it's been a lot of work and a lot of headache. And where I'm at in my life, I quickly realized and remembered, like, hey, I love talking to sellers, but I don't, that's not what I do full time. I understand the businesses pretty darn well at this point, and I love underwriting. I love financials. Coming as a private money lender, like my underwriting has to be spot on, right? To be able to make sure I'm not losing money on a deal. But man, when it comes to businesses, like someone sent me some profit and loss statements yesterday. I got 5 years of P&Ls, and I was sitting there like a kid in the candy store going through P&Ls. Like, it's so silly, but it's fun to me. I love it. And so I kind of took a step back, and I realized, you know what? I don't want to be the operator in these, right? And thanks to Abraham and Carl Allen and that whole mentorship, the protege mentorship that Carl has and I'm in, it's really kind of reset my mindset again, right? It's just my journey is just a constant growth journey, man, which is great. I love it. Just every month I'm like, okay, I have a new thing here, whether it be a new goal, short term, long term. I don't change what I'm doing, right? I'm doing the same thing. I just have different tweaks in how I'm getting there. And I realized I don't want to be operating these companies. I have other goals within my life and my family, and I have significant things that happened in my past that made me get to where I am at right now, where I do not want to be tied up all day long running employees and having to worry about anything like that. So I've shifted pretty much completely to a private equity investor role. So I can still help, negotiate deals for people, talk to sellers. Deal structure is a really, really helpful one, because if you're going to buy a business and you're going to go through the SBA, I understand the deal structure where we can make it a bit creative, so you can come in with less money down, right? And if I can help you get less money down, and then I can also be that person to bring that money for you for that equity injection in exchange for a small portion of equity in that company, then hey, it's a win-win, right? And I get to do what I love, and then I get to be a silent partner, hands off. I get to put my money to work.
Love it.
I get to help on the front end, and then also my network. I have such an incredible network of people who are already business owners or are business consultants. One of my best friends is a venture capitalist consultant for startups. The dude is like one of the smartest guys I've ever met in the world, but not just smart, like he's smart, like book smart and street smart. And he is like super helpful and a go-giver. His name is Mustafa. And Mustafa and I have big plans with Mustafa. I don't know if he knows this yet, of eventually having our own private equity company, private equity and consulting, because he's a consulting master. And I love the private equity side of things. And, there's private equity where they're going up and they're buying a bunch of companies and rolling them up and reselling them. But I'm looking at it from like hey, let's be a private equity as far as like these small cap businesses to actually be investors in, where we can bring on eventually LPs to come to our fund to reinvest into other deals that we see fit. And then Mustafa is a consulting side, where any company we invest in, if they're having trouble or need help, boom, he's here and he comes in and he can help right the ship. If there's even a ship to be righted, is that a word? Or he can help with the startup process, the stabilization process. He can also help with the actual, like, kind of a market viability study, as we call it in like the self-storage world. It's whether or not this company is like, does it have legs? Like, should you be buying this company, right? Is it going to succeed into the future, right? I can't think of an example of a bad company to buy, because I don't know if there's really a bad company, but certain companies you might not want to buy because the trend is going down, right? Like I don't know if I want to buy something where, technology is outpacing what this company can actually do. And so yeah, man, long story short, businesses that I look for, really, I'm now just looking for other people who are trying to acquire their own businesses, seeing if I can help with negotiations, underwriting, do a lot of underwriting with other people, because it's, like I said, it's so fun. And then also see if it's something where I can bring, some capital to the table in exchange for equity. And I have a whole group of about 12 other people now who are doing this with me. And so every time we come across a deal, like depending on how much money it needs, like we may come in as a pool of investors, like split up the equity amount. Like if there's a 20% equity offer, so say for like 10% down of an SBA deal, if we have to bring 10% down because we didn't negotiate good enough to get 5 or 2.5 down, and so 10% down, we want 20% equity. and say they need $500,000. Well,
Hmm.
one of us could bring $500,000 for 20%, or five of us could bring $100,000 each for 4%. It's the same returns, the same ROI. Then we get to spread out our risk and our reward, right? Because I'd rather have 4% of 10 companies than 20% of two, right? Like you get to ride the upside on all of them. You get to decrease your risk across the board. So yeah, I don't love restaurants and bars, and I don't love anything that's nefarious or non-bankable. So while like the marijuana industry is like super super lucrative, if it's not bankable, then it's probably not something I'm going to touch with my money currently, right?
Right,
But yeah,
right.
man, that's about it. I feel like I've been talking for 20 minutes straight now.
No, you're good. You're good, man. So what about market wise? Is there like a market, like a city and state you wouldn't touch? And is there like a city and state you prefer?
I don't like California. Um, I worked for the government in California for 20 years, and I know how they operate. And all of my family members who had businesses has left the state because of how business unfriendly it is. I'm not sure that's the right term. Um, but I don't have any interest in owning real estate or businesses in California. That's pretty much it. Lots of other states have plenty of issues, and there's plenty of other states that are not business friendly as well. But I'm not going to turn my nose up at it, right? I own property in New York, and New York's not a great state to own stuff in, right? We've looked at my Colin Gibney, my partner Colin Gibney, and I. We've looked at a bunch of businesses in New York. Um, that's okay. I'd consider it. I just will not consider California, whether it be a personal vendetta against them or just my actual knowledge of how that entire state works. I have zero interest in California, and that's about it. I'll look at
Right.
anything else.
I've seen so many horror stories out there. It's crazy.
Yeah,
You know?
it's bad. It's rough. There's a lot of bad things about how they operate. It's an extremely corrupt government. It's a corrupt state. People, it's lovely weather and lovely topography, right? And that's great. Like it's a great place to go visit if you can handle being, bombarded by violent homeless people every day. But other than that, and your car getting broken into every day, other than that, it's great.
Right. So are you more focused on investing in businesses now? You're cutting out the single family like hotels and apartments and all that. So just strictly businesses right now.
So part of that yes, and part of that no. So I am not interested in acquiring any more single family at this time. I do have three partners throughout the country who are multifamily operators who are total like rock stars, and all three of them, we are working on something always behind the scenes. Currently, there's one that one of my partners is working on that's a big 100+ multifamily deal that's like full seller finance. Now it needs some capital down and some capex right away, some repairs right away, and so I can bring that right, and then I can also bring my the little bit of knowledge that I have in the multifamily that I do own, and the network of multifamily experts that I'm kind of tapped into. And so I am still considering multifamily. I love that over single family right now. The single family, the amount of work it just takes just to stabilize it, even with just hiring a property manager, just going through just the process of buying it, I could just do pretty much the same amount of work on a larger multifamily, right? And it really comes down to like the money making activity in your time. And my time is just not as well spent on a single family right now. Now that could change, right? Next year, but because of my business investments and the amount of active income I could be making from that. Plus, I'm still doing fix and flips with partners as well. And so I still have I have the fix and flips going on. I still do some private money lending. I do some land flipping with a partner where I'm really just a lender on it though. He does everything. Like he's an expert. This is what he does. It's his whole job. He buys land, he sells land. I fund it. We resell it. We split the profits, right? It's super lucrative. It's incredible. I'm averaging 114% ROI on my money on that. I mean,
Wow.
it's like it's capital stacking, right? So fix and flips, land flipping, capital stacking, and then every time you have a capital event, you can take that and then you can go re-lend it out either to as a business equity investment or as an actual lender on a real estate deal. But what I have found, and Sub2 kind of spoiled me, was when I retired from my W2, I was a passive lender. But then when I retired from a W-2, I became such an active investor. It didn't make a lot of sense for me to be lending at 10, 12, 15%, which are incredible numbers, right? Like if you were to told me 10 years ago you're going to give me 15% of my money, I would have been like, let's go. Like I'll take that all day long. And that's still an incredible return. But with businesses, fix and flips, land flipping, I mean, I don't make anything less than 40% on my money. And so I'm just right now, while I'm still I have short-term goals I'm trying to reach, and I have long-term goals. And short term, I'm still very active and I'm still trying to hit these certain goals that are pretty aggressive. Once I get to a certain point, I will take another step back and become more passive again. And so real estate lending is somewhat on pause right now as far as just straight PML and HML goes. But I should be coming back to that soon. I'm actually in talks with another gentleman who had a business venture idea that's essentially just private money lending, bringing in what his resources were as far as capital tapping goes, and then bringing my knowledge in to help kind of operate it. So that's in discussion. So that could be coming in 2024. So we could be, advertising straight up private money lending again coming in 2024. But for me, the business side is where most of my focus and aggression, it's not aggression, but my how aggressive I'm being on what I'm focusing on is all business equity investing for now, just for the short term future. And so that's a long story short of where I'm at right now. So still putting money into fix and flips, multifamily, land flipping, and businesses. That's pretty much the focus right now. Those four
So,
things.
so if somebody like a property finder found a business, you probably don't want it to be listed, right? Probably want an off-market one, something like exclusive, correct?
So it's funny with businesses, brokers. We all know real estate agents in real estate world. Most of them are not investor friendly agents, right? Frankly, most of them are. I mean, I hate to diss on real estate agents, but most of them are just clueless. Like they have no idea what they're doing. It's embarrassing, frankly. Well, get into the business broker world, and if you thought real estate agents were bad, hold on to your hats, boys and girls, because business brokers are jokers. I mean, it is. I have had some discussions with brokers who don't understand how even a multiple on a business works. They don't understand how to evaluate a business. I had a partner who sat in on a business broker meeting one day where this person was trying to sell their business. I can't give too much information away about it, but this person was trying to sell their business. They were netting $18,000 a year net. They weren't even paying themselves yet because they weren't making any money. $18,000 a year on a business, that's nothing. I mean, you're one small issue away from losing money, right? This person had a few vehicles in their fleet. That's the only assets they had. They leased a building. There was no real estate. Their customer concentration was too high. Essentially, like if say I have a company where I'm offering consulting, right? And Justin, you're my only client. That's a big problem, right? Because if I'm making say $1 million off of you for consulting a year and you leave, my business goes to zero, right? So customer
Right.
concentration is a big deal. And this person had a very big problem with customer concentration. I think 50% of their business was one person. So that one person goes and your company is crippled, right? So this broker, getting back to how terrible brokers are, took on a piece of paper, wrote down the vehicles this person had in their fleet, how much money they were doing revenue wise, right? You can do a multiple off of revenue if you want to, but it doesn't mean shit, right? Because it matters what you're actually making, what you're taking home. And he took the revenue and the vehicles and made up some random number and told this person their company was worth $800,000. Their company was worth liquidation, which maybe was $100,000 maximum. And that is anybody who knows anything about business or M&A or valuating or underwriting of a company would know that this was an absolute insane joke, right? So they leave the meeting. My partner asked the guy, "Hey, this person's only making $18,000 a year and has like 4 trucks in the fleet. How is it worth $800,000?" And the dude straight up admits, "Oh, it'll never sell for that much. We just get our listing fee and move on." Bro, that's
Wow.
so unethical. It's so dirty. And you hear these stories over and over again. And what happens is, now obviously we come I don't come from a creative finance world, right? Like 20 years of real estate had nothing to do with creative finance, and I had great success. But now that we're in the creative finance world and you kind of see the opportunity that's there, and not everything has to be fully creative, right? And that's the best part about businesses is you mix a little bit of creative with a little bit of just say SBA bank debt, and man, it's so lucrative. You can just get into incredible deals. And these guys just all they're worried about is their commission, right? Brokers make 10% off of selling a company. Dude, these guys will take a listing, they'll put it up on Biz Buy Sell, which you could do your damn self. And they, make an NDA for you to sign. You sign the NDA, they send over this sim they made, which is totally half-assed and garbage. Anybody who's looking for private money I'm getting sidetracked here. This is what I always do. Anybody who's looking for private money should always have a pitch deck available, right? If you cannot take 10, 15, maybe 30 minutes if you're new to it to build out a pitch deck to send to a potential lender, why am I even going to give you time of day? Because I need to trust that you're going to be able to put in the work to actually operate the asset you're trying to get money for, right? If you can't put in 30 minutes to making a freaking pitch deck, right? So brokers, they don't put 30 minutes into making these freaking sims, and like the flyer essentially for these businesses. I mean, most of the time it's just garbage, and they're just taking copies and pasting like P&Ls and throwing them in there and like writing a little bit of information about it. Now, now that I've shit on brokers enough, there are a lot of brokers who I have encountered who are actually competent, right? Just like with real estate agents, there's a lot who are investor friendly, meaning they're investors themselves, meaning they understand what real estate actually is, right? Brokers are not in business. Real estate agents are not in real estate, right? They're services to those to those industries. Now, if you get someone who's actually an investor themselves, or you have a broker who actually knows what they're doing, that's a game changer, right? So this was a very long way of answering your question, Justin, of do I want off market versus not? I hate to say, but it depends. We have bought a business that was a broker deal, and it was a great deal. And the broker was competent and smart, and that understood that we were having a partial creative portion to it, a partial SBA side to it, and the seller was actually able to work out with the broker to pay them, a 10% fee of the actual SBA loan, and then 10% for the next 2 years off of the annuity structure. So, and the broker was like, great, because he's getting his money now and he's going to get more money later too, right? And so they were creative with their own broker, right? Which was amazing. Everybody kind of worked together. There was good synergy. Now, with that said, off-market business deals are always, well, not always, majority of the time are going to be way better than broker deals. So yeah, off-market lead generation for businesses is where you can kind of find some really, really good deals. Brokers can be helpful in the fact that communication with sellers sometimes can be difficult because they don't know what their business is worth. So they may come in with unrealistic expectations, right? Like, hey, I've been making $500,000 a year on this thing. So, if I'm going to sell it to someone, like, I want $5 million. It's like, well, that's a 10x multiple. Like, that's not reasonable, right? Your 10x multiple, not until you get into the $5 to $10 million EBITDA range are you going to consider a 10x multiple, right? But they're thinking like, well, this person is buying, $500,000 a year of cash flow. Okay, sure. But not really, because my new debt's going to come in and it's probably going to crush it in half right now with current rates. So I'm going to be making $250, right? So, a $500,000 deal, that's depending on the industry, that's, roughly a 3x multiple, which is kind of the basic rule of thumb to use on everything is a 3x. And you can kind of go up and down from there. We had a deal we were looking at where it was a 4.1x multiple, but it was an incredible deal. They had incredible systems in place. They had a GM in place. It was going to be such an easy transition that we were happy to pay a 4x multiple for it because we're going to go get this bank debt. We're going to bring 5% down, and we're going to make all of the money we actually put into the deal back within 18 months. So then we're in the deal with no money essentially after 18 months. And after that, you're just making free cash flow. And the company was running itself. So there's a good and a bad side to brokers. The off-market deals, though, are typically the ones where you as a buyer are going to get a lot better deals. You can get more creative with your deal structure because you don't have a broker in the way trying to stifle your, offers of, annuity, seller finance versus, actual bank debt because they, brokers always want cash, right? Now, some of them is true. Some of them is not true. Some of them will put on their actual sim that there is a portion of seller finance that will be considered, right? And that's a gold mine. If you have a partial seller finance, the SBA rules right now, if you get someone to carry 10% of the debt, right? So let's just say we're buying it for $1 million. We'll give them $900,000 down through SBA, but we want them to carry that $100,000 seller finance amount, right? That 10%. And if you can get them to agree to defer that $100,000 for the first 2 years, then you might only have to bring a 5% equity injection. If you can get them to defer that 10% for the full 10 years, so like, hey, you're going to get a 10% balloon in 10 years from now, you may only have to bring 2.5% down. Or if the structure is good enough and the deal is good enough, you may come out of pocket zero. I've talked to SBA lenders who said that there is a chance to come out of pocket $0 by leveraging the accounts receivable and the working capital that's already in the company, where you may be able to buy it with no money. Now, obviously, you got to pay SBA loan fees, attorney fees, et cetera, but you can roll those into the loan, just like you can with real estate. That's few and far between. But the 2.5% down option and the 5% down one is so easy. Defer it for 2 years. Like, don't take any payments from me for 2 years, and then we'll start paying you that extra 10%. Man, that's easy. That has not been hard to negotiate with people. People are typically not like, I want all my money up front right away. Some are. And if you're a broker, that's what they say, right? But that's when you get on the off-market ones, you can really structure it, And like, the crazy thing about bank debt on businesses is it's so much more risky than an asset-based lend on real estate, but they're so much easier to work with. Like, if you want to take, like, let's talk about like a Morby method, right? If you want to go buy a house, real estate, and you're going to go through a bank to get debt, and you want to do a Morby method, they're not gonna want to have a second position on closing. They don't want to have a seller finance portion of it. They want to have all their money, and they want to have a certain loan to value that they're going to look at and consider. You got to these business lenders, and the business lenders are like, seller finance? Hell yeah. Like, bring it on. That's great. Oh, they want to seller finance. They want to carry 50%. Great. We'll lend you 60%. They're like offering the Morby method to you because they want you to have 10% extra of working capital because it's such a good business. And the seller is so confident in their company, they're willing to seller finance half of it to you. So it's just it was such a mind twist for me to start understanding the bank debt for businesses. You're like, wait, you like creative? You like these? Because it's not asset based. So there's not like a second position on the loan. There may be some UCC ones on like assets where they're having some sort of lien on assets in the company or equipment and whatnot, or if there's real estate involved. But for the most part, the business lenders, while it is a very long process, the SBA says like 60 to 90 days is like the loan process, but that is absolute. I have not heard of it actually happening that quick. Now there's SBA express loans that can go faster. There's micro loans that go faster. But if you're going through SBA 7A, because you're trying to get, let's just say, $1 to $5 million, right? Because every one person is capped at $5 million for a 7A through SBA. It's been 120, 180 day processes. It is a very long process. So as long as your seller understands that it's the bank that takes a long time through this whole process, because their amount of due diligence they do and the underwriting they do is so deep and so aggressive. But that brings me to another topic, which is, as an equity investor, I love SBA deals because the SBA is essentially a separate entity doing due diligence for me, right? I'm going to do my own due diligence. I'm going to underwrite the company. I'm going to do my own market viability study. I'm going to underwrite you as the buyer, what experience you have, right? What other partners you have bringing on? Is the owner staying on to train? Is there a GM in place? There's so much stuff to consider. But the SBA is going to do so much due diligence for me, essentially, that if they agree to lend on a deal, it's almost like a no-brainer for me. So I'm like, if they're willing to put up 75% federally guaranteed money to this deal, because they don't lend on everything, right? There's a lot of deals that get shut down. Then I, as an investor, it's like, take my money, right? And now if it's a full seller finance deal, which we bought one of those too, it's a lot more front end work for me, a lot more, because there's no one else who is SBA underwriters clearly know way more than me, right? Like I know a little bit about this stuff, right? Luckily, I have a network of people that know a little bit about this stuff too, and we kind of all come together and work together. I feel like I know a lot about a little, and then I know a little about a lot, right? Which is great. And I can rely on other people to help me for those things that I don't know a ton about, and then I can go help other people where I do know a ton about those things. But if the SBA underwrites it again and they're comfortable lending on it, then man, it makes me so much more comfortable as an equity investor to put my money in. Because I've had just a second set of eyes, essentially. A second set of eyes from someone who knows more than me, right?
So I got a question for you. Going back to the private money lending stuff, can you
Yeah.
share an instance where a borrower faced a challenge in repaying a loan back, and how did you handle it?
Yeah. So I lent on a fix and flip deal where the borrower, the numbers were all great, right? Underwriting was good. The comps were good. The ARV was an appropriate range and a conservative range too. And that came down to it wasn't the deal that was wrong, that had an issue. It was the actual operator. So this person overextended themselves and had, I don't remember the number, but it was like 8 or 9 flips going simultaneously. And their partner, their construction partner, quit. So now you have 9 flips that you're working on, and your crew and your construction partner had a crew. Your partner and your crew quits on you. So now you're by yourself. And now you're trying to figure out how you're going to bring in more people to help you work on 9 flips simultaneously, which was way overextended, right? So they disappeared essentially. And weren't reachable for about 4 months. Through every channel that was attempted, could not find them or reach them. And then they reared their head again, and it was the woe is me story of I took on too much. And I mean, like, I understood, right? I'm not trying to shit on the person, but they did mess up, and it is their fault, and it is their issue. And if you're going to borrow money from someone, you better be damn sure that you're going to finish the job. And so what happened is the market started to change. Rates started to skyrocket, as we all know. And even if they did finish the deal, the ARV was now worth less than what they owed the hard money lender and what they owed me as a private money lender. And the expenses stacked because holding costs stack the longer you have it, right? So this guy owed the hard money lender so much money, and there was fees tacked onto it, and they're in first lien position, right? This is the risk of being in second position. First in time, first and right? They're first in time, they're first and right. They get their money first, especially when we have to go and foreclose on it. So that wasn't an option, because if we foreclosed, it was going to be, and here's the other thing, is the structure was wrong. We structured it where we deferred payments till the end. So it was a profit split at the end, right? Which is a dangerous thing to do, because you're not getting paid the entire time your money's out, which essentially is not, they're not proving to you that they can even pay you, right? If you defer payments that whole time. But then also they were not updating us with, the progress, right? There was a lot of lessons learned from this one. Like, hey, I need, bi-weekly updates on the progress of the project. Because straight up, like, if you have an issue, I want to be able to come in and help fix it. I don't want to just let my money sit there, because now my money's at risk, right? Like, we could have fixed this months before the actual issue came to light. We could have fixed it, but the person was embarrassed. And I mean, that's just unprofessional. If you're embarrassed about something that went wrong, like, stuff goes wrong all the time. Like, it's just business. This is the world we live in. Nothing goes perfect all the time. So, like, when stuff goes wrong, all you got to do is communicate it. Like, thinking that someone's going to be like have some sort of personal vendetta against you because something went wrong, like, that's crazy. Like, that's such an amateur hour mindset to have. Well, this person was amateur hour, right? So
Right.
now they have no crew to finish it. They've disappeared for 4 months. The market has not tanked, but the market has dropped enough now. They've racked up enough fees where even if they do finish it, you can't get your money back. Like, you're screwed. So the creative thing we came up with this was this person has other properties, and those properties have equity in them. And I can't force this person to sell their other properties to pay me back, right? But
Right.
I could try to negotiate, like, hey, how about we create a note on this other property that you have equity in second position, and you start paying me what you're owing me, like actual interest rate of what you owe me, and we will sign off the deed of trust on the other house that will never be able to get our money back on. Then, after you pay me this note for, 6 months, say. You've made me, interest only payments. Now I have a second position note that I can go sell on the note market at a, probably 25% discount, but whatever. So say it's $100,000, I can go sell it for 75, and now at least I've recouped 75,000 of my 100,000, and I've had a $25,000 learning lesson, right? That's one example. There's other ones. I have a lot of examples of other people too, and of course I won't name who they are, but due diligence is a really big part of it, right? If it's a fix and flip, staying on top of your contractor is a huge part of it, because you're relying on the operator in that scenario, right? If you have a hard money lender in first position and you're in second position, there's a great chance that your money is really unsecured. Unsecured meaning there's no actual equity yet to actually make your money excuse me, safe, right? Like if it's $100,000 house and the hard money lender has a $90,000 loan on it, and you're coming in with $30,000 for the fix and flip, thing's only worth 100 as is. Like you are lending unsecured. There's no equity to actually secure you if they don't perform. Now, if they perform and this thing is now worth $200,000 and the all-in value is 120 between the hard money and you, then you have plenty of equity, right? And that's the whole point of a flip, right? Is when it gets to the point where it's done, you sell it, that's how you get your money back. Plus, you've either made interest payments, you've had interest payments paid you along the way, or you have some sort of profit share. And so really you're relying on the operator, right? And that's where you have to really underwrite the person. And by underwrite the person, I mean, you're looking at their past experience, their past deals, talking to their past lenders. I want to know how their communication was. I want to know if they met their timeline. I want to know who their construction crew is. Like, there's a lot I'm going to want to know. And it's actually a great way to rule people out who are trying to borrow money, because you start asking questions about, hey, I need this, this, and this. And then they'll be like, oh, then never mind. Like, yeah, okay.
Right.
Yeah, okay. Sure. Thanks. Yeah. I'm glad I didn't lend to you, But unfortunately, we have a lot of people out there who are sitting on capital who hear like, oh, I can private money lend, and they don't do any of this stuff. They don't know what they're supposed to do. And so they don't do any due diligence on the person. They have someone who's like a connector telling them, oh, it's a great deal. But they didn't do any due diligence. And then guess what? It's not a great deal. And now they lost money. Like, it sucks, man. Like, so my goal is to try to, help other people not lose money. That's pretty much it. So with lending, there's a lot of stuff to consider as far as like your actual security instrument, right? Which typically most of the time it's asset based and it's in the equity of the actual investment. So like for long-term rentals, I love long-term rentals. I have a lot of lends out on long-term rentals where they bought the house for like a great cash deal, and I just funded the entire deal. And like, it's, say it's $100,000 house in Ohio, right? A lot of duplexes in Ohio for $100,000. And it's like, hey, they scored it for $50K cash, right? Boom. I'll lend that $50K. I know I have another $50K of equity. It's a great cushion in case I ever have to foreclose. I know I'm going to get my money back. Plus, I'm getting paid 15% interest only from the person who owns it. And their renters are in place paying them, $1,800 a month. So like, their debt to me is lower and their rent is high, so everybody wins, right? And that's like the basic structure of private money lending, right? Like, you as someone who's buying a rental, you're going to make enough rent to cover your debt, and the debt happens to be a private money lender on this one, and you're still making cash flow yourself, right? And that's the whole, getting into houses with none of your own money. Like, yeah, it's true, bro. Like, I have bought gosh, probably 20 properties without using a penny of my own money in the last 2 years.
Love it.
Great.
Love it.
Because I'm using my own private money lenders, right? They come in, there's enough money for me to pay them and for me to still cash flow on the actual house, right? That's the whole point of it. So, gosh, okay, getting sidetracked again. Let me go back. The other thing, I don't like to like really poo-poo on these, but the real hot thing, and like especially in the creative finance world, is like the no equity deals. The people that are going to buy them and resell them on wraps, right? Now, wraps have a ton of issues have come up from wraps because they're hard to sell. Sometimes people, will buy a deal that they think they can resell, and they can't, right? Frankly, they cannot resell it because it's just not a good deal. And so as a lender on a wrap where there's no equity, you are lending unsecured. It's the riskiest thing you could possibly do, right? So how do you mitigate that risk, right? How do you mitigate a risk of having a passive lend out where you're not really secured by anything? Well, you mitigate it by having some sort of control. Now, if you think the deal is a good deal and you can resell it on a wrap, or say it's a fix and flip, and there's no equity currently, and you're not quite sure about the operator, well, you can have some sort of control in the form of a partnership, right? So if you come in, instead of just lending on it and having a deed of trust, a promissory note, securing you to nothing because there's no actual equity, unless the person's willing to cross collateralize. Like my house, say I had like $200,000 of equity in my house and I'm going to buy a $50,000, I need $50,000 from someone. I can go put their promissory note and deed of trust, the lien, onto my personal house where there's plenty of equity. So if I don't pay them over here, they can foreclose on me over here, right? Now, the goal is to never get to the point where you ever have to go through foreclosure or you never have to go through any sort of litigation, because it gets way more expensive. You're not even guaranteed to get your money back. Most people, unfortunately, most people in this industry are judgment proof, and judgment proof meaning that even if a judge were to say, okay, through litigation, yes, you lost the lawsuit, you owe this guy $50,000, they don't have $50,000 to their name. They don't have $50,000 in assets. So how are you going to get paid? Like, they're going to garnish their wages and take 30% of their part-time job wages to pay you for 40 years. It's crazy. So you got to be really careful in the person you're actually lending to on a lot of, there's just a lot to consider. But going back, control, partnerships. If I am on title, now a lot of people don't realize that when you buy a house and there's the title to the house, the deed, you can have as many people on that or as many entities you want on that. Like I saw one recently where there were 7 entities. There were 7 LLCs that owned on title. So all 7 companies had a right to this house, right? It was broken up in a certain percentage, right? But then you get into your legal paperwork, you get into your operating agreements if you have a shared entity, you get into your joint ventureship contract if you're just going the JV route, right? But if you have a partnership where you have some sort of control, meaning in your documents it shows you as the lender, this is what I would do. This is what I would do for Morby Method deals. I may only be getting, say, 20% equity and 20% cash flow of a deal for coming in and sponsoring a loan and doing transaction lending on it. However, on the operating agreement, I have 51% voting rights. So I'm in full control of the deal. So if you and I bought a deal, Justin, and I was like, hey, there's no equity in this wrap deal, so I'm concerned about my money, getting lost. And like, what if something happens to you? Like, it's not even if you do something wrong. It's just like, what if life happens, Justin? Like, what if you get abducted by aliens, right? It's the thing that Pace always loves to say.
Sure.
Where if you get abducted by aliens and I have, $50,000 with you and I have no control, like I'm screwed. I have to wait for the legal process to go through and for this house to sell. Whatever happens, like if there's a trust or there's a will, there's probate, like it could be years or never that I ever get my money back. However, if I co-own that property with you, and in our agreement, whether it be the JV contract or if we have an entity, the operating agreement shows that I have 51% voting rights, I get to come in and take over control. I get to change. If say it's a rental, I get to change property management. Say it's a wrap, I can sell it. Say it's a fix and flip, I can hire the contractors to come in. I have control to come in and take over the actual, the asset and finish whatever we tried to start, right? That is how you mitigate your risk on these deals. Now,
I love that.
Yeah, and a lot of people just don't, like, hey, you can co-own on title like 50-50. Like Justin LLC, Wes LLC, 50-50. We're both on title, right? We both co-own this thing. Operating agreement, though, as the person who's bringing the money, I just want that extra 1%, meaning that I am the final yes or no on anything. And I can bring this paperwork to an attorney. I can bring it to a property manager. I can bring it to a real estate agent that shows here I am legally the majority owner. I get to make all of the decisions, right? And what you do is you build into that contract ifs and thens, as we call them. So if Justin gets abducted by aliens, then Wes gets to take over full control and hire, sell whatever you need to do. You can build in whatever you want into contracts as long as it's reasonable, right? So my wife's a contracts attorney, and she's going through this for the last decade. We've learned a ton through this, and she's kind of been an incredible resource for me to kind of teach me and understand, like, hey, we can't put something into a contract that's completely one-sided, right? Like if I took all of the risk off of me and put it all onto you, Justin, and then something went bad and we had to go to court, the contract, the judge looking at the contract is going to absolutely throw it out and be like, this is not reasonable. There was no risk. It doesn't have to be equal risk reward, but there has to be some sort of risk and some sort of reward to both sides. Not 50-50, right? But so I can't be like, hey, Justin, if you don't get this wrap sold in 3 months, the property becomes mine and I fine you $5,000. Like, that's not reasonable. No one would hold that up in court, right? But if it was, hey, Justin, you need to be marketing this property, every month for 90 days, and you don't meet that, then I get to step in and do the marketing for this. And any money you've put in is forfeited to the asset. And I'm not paying you for your marketing, right? And you're not going to get it back when we sell the house because you didn't do your job, right? Little things like that. That's how you can build it. There's so much stuff you can put into contracts. It just has to be reasonable. And most of the time with real estate, it's pretty straight up. Like, hey, this is what your job is. If you don't do it, this is what happens. If you don't do this part, this is what happens. If you don't do this part, this is what happens. It's kind of where people get tripped up. They're like, well, how do I write a contract? It's like, well, hire someone to write one for you. Like, pay one time to have an operating agreement written for the type of deal you think you're going to be doing. If you think you're going to be doing a bunch of private money lends and you really want your own promissory note, deed of trust documents drawn up by an attorney, okay, fine. I like personally at this point, because I know them so well, if I'm lending on a deal, I just want title to, or the attorney, if it's an attorney state, to draft up the promissory note and deed of trust for me, send it to me for review, and then we'll make any red line changes we think are needed. But for the most part, it's pretty straightforward. And but that's for like a straight private money lend. If you're doing an actual operating agreement or an actual JV contract, it's really nice to just have one template done for you, right? Like pay to have it done one time. And then you have a template that you can go and adjust every single time. You change the address, you change the LLCs, you change the parties you're working with, you change the ifs and thens, and because every single deal is going to have some sort of different part to it. Like if you're lending on a fix and flip and the person doesn't communicate with you, for 6 straight weeks and they've ghosted you, you need to have some sort of recourse. Now, your recourse still may unfortunately have to go through the court process, but as long as it's in your contract, that's how you're ultimately going to be secured. Now, if you don't have that contract, and like me with this one fix and flip, I have no recourse. I have no recourse other than to foreclose on a property that doesn't have enough equity to pay me back. So why would I foreclose on something where I know I'm not going to get my money back? I'm not going to get any money back. See, then you got to get creative from there, right? We did the creative thing of creating a note on the side. That's not always possible. And you should avoid that in the first place by making sure the person you're going to work with is, knows what they're doing, is knowledgeable, has, good crew, has good experience, pays their lenders back, and communicates with you on I demand a biweekly basis. If you don't update me every 2 weeks, then you are a violation of our contract, right? That's not unreasonable. Right. If you're a hard money lender, you're going to be, if you have working with a hard money lender, you're going to be updating them on every project, every step of the project anyways, right? Everything you progress to, you send pictures, you send proof of performance. They're going to give you the next draw, right? Because you get the draws to pay your crew of people who are working, and you do the next thing, right? That's expected. That's normal. If someone has a problem with you wanting to be communicated to every 2 weeks on a fix and flip, then that's a red flag and you shouldn't work with them.
That's true. So I got a question for you. Going back to the pitch decks, what would you like to see? Like, let's say somebody put together a pitch deck on a property they have that they want a private money lender for. What would you recommend, being a private money lender, that they should put in there so they can become better and be more efficient?
Yeah. So first of all, there's 1,000 templates of pitch decks out there, right? Like Canva has private money lending pitch decks that I've seen. People on YouTube have them. A bunch of people, if you're within the sub-2 community or you're within the protege communities, they have pitch decks in there for you to view. It's really just a clean breakdown of everything about the deal, everything about you, and everything about the exit plan, and everything about the contingency plans, right? That's what I want to see. I want to see what's the deal. The first thing I always want to know, first of all, right? First thing I always want to know is what type of deal it is and what you're offering, what you need and what you're offering, right? Because if someone comes to me and it's like, hey, I need $100,000 and I can pay you 8%, it's like, okay, it's not even going to waste my time because I would never lend at 8%, right? So like that's easy write-off. Next, say like, hey, I'm looking for $100,000 and I want, I'll pay you, 13%. It's like, okay, that's a juicy number. Let's take a look at it. Now I want to know, what is the asset? What is the exit strategy of the asset? Who were you? What your experience is? And if it's a fix and flip, I want comps in there. I want to see what your projected ARV is. I want to see your rehab budget. I want to see now, I dealt with this yesterday. Someone they want money on a fix and flip, and they had a rehab budget of like, it was like $15 a square foot is what it equaled out to, which is not reasonable in any way. And I was like, this is not right. This rehab budget is not right. Well, they sent me, I said, do you have a line item quote from your contractor? And they did. And the contractor, the small town contractor dude, wants to work repeatedly with this person. So he was giving a great deal on everything. And it was a line item of every single thing that needed to be done. And it was a great deal. Like, I'm pretty sure they're going to have a lot of change orders. That's going to make it more expensive. So I was building an extra 15% as a lender in my mind for how much more money they're probably going to need. But this guy was, it was like a $60,000 rehab on like a 2,700 square foot house or something like that. And it needed like a full rehab. It was something similar to that number. But it was like great. So they had a line item, actual, what's the estimate from a contractor? I was like, great, that's solid. So I'd love to see that if you have it. If you don't have it, I want to know how you have a rehab estimate. Like in Arizona, we may use, if it's a full rehab, we may use a certain price per square foot just to go off of to start, and you can adjust up and down from there. But yeah, it's really just like basic information. Like instead of having to type it all out to me every time, just put it into a pitch deck. It doesn't need to be some like beautiful PowerPoint presentation. Like I've seen ones that are one pagers. One pagers are fine. That's a great place to start. One pager has the asset, the lend requested, the timeline, the return, and then over here, exit strategy, contingency exit strategy. Like, oh, this is not going to work as long-term rental now. What else can we do with it, right? After we fix it, can we sell it? Like, are you burning it? Are you selling it as a fix and flip? Are you buying and holding? Like, I want to notice what you're doing. And then a little bit about you and who you are. That's a great start, right? Now, to get more detailed, it'd be better for you to show like your past projects. You don't need to put your past lenders on a pitch deck. I'm going to ask for that individually. Like if you've borrowed money before, because my rule is that if you haven't borrowed private money before ever, then I'm not going to lend to you. And I get some people who are like, well, how am I supposed to start in real estate if you won't lend to me? I'm like, well, that's just me. Like, go find someone else. Or better yet, bring on a partner. That's how you build credibility. Bring on a partner. Oh, I don't want to give away half the equity. Okay, well, give away half the equity to build credibility, or go the fuck away. Like, what's your other option? Or find a private money lender within your family or friend network. Like, find someone who trusts you as a human being because they know you. If you're not willing to partner with someone, I talked to some kid the other night who was like, I don't want to give up equity. I'm like, okay, why? Well, I want it all for myself. Okay, why? Well, I'm like, okay, what about scaling? Well, I don't want to scale. I'm like, okay, well, you're just a, obnoxious asshole. Like you don't want to scale. Okay, what are you doing then? Like you just want to do everything by yourself. Then have fun going slow. I did that for 20 damn years, and I can tell you where I got. What I've done in the last 2 years has blown away the past 20 years because I leverage other people and I partner and I give away equity and I share things. Because what does Pace always say? Would you rather have a whole grape or half a watermelon, right? Like it's a great analogy. Like, yeah, like I can do all this, I can have it all to myself, but I'm going to do these little things, or I can share with other people, grow together, scale together, and get this big of a chunk. Even though it's half of something, I'm getting more in the long run.
Right. And you're like building like residual income, because then that person could bring you more deals. Y'all can work together on hundreds of projects. There's a lot of wholesalers back in the day when I just did wholesaling that'd be like, I don't want a JV, just buyers only. And I'm just like, and then I had a buyer that was willing to buy it already. Like I sent the property to the email, but they just ended up canceling the contract instead of JVing. It's crazy.
Yep. It's a mindset issue, man. It's the scarcity mindset, right? Like and some people, I mean, like, let's be honest, some people are in absolute survival mode. And it's like, if I don't make $5,000 this month, I can't pay my bills, right? So like, I understand, like there's a level of fear, there's a level of mindset where they're coming into something where maybe they don't feel like they can share in something yet. Now that's I understand that, right? Like, let's be honest, like that would be a hard situation to be in, where it's like I'm trying to survive month to month. I can't split this up because I won't be able to pay my bills, right? That's one scenario, right? And I know there's people out there like that. But I talked to some people who are already having success, and I know they're not surviving month to month. And when they are like, oh no, it's all by myself, I'm like, okay, man, that's great. Like everything I do is with other people, right? And what I really do, and I think this is such an important thing. And I was at a meetup the other night, and I had the dreaded, "What can I do for you?" question. And I'm like, man, you want me? You're trying to give me work, thinking about what you can do for me, rather than just like being around and listening to me talk and understanding what I need. And like that's such a under misunderstood. What's the right word for this? People just they don't get it. Like I go to as many events as I can in person, and I listen to people talk, and I hear what their issues are having, and I try to find out what value can I bring to this person without them having to tell me, right? And then
Right.
if I can solve some sort of problem for them, which I've done multiple times now, holy moly, I don't expect anything in return. I'm just trying to give value to other people. It always comes back, whether it's in
Always.
the form of some like I just randomly raised some money for someone recently, which is like not something I ever really considered doing, like raising money for other people. But I just by chance raised money for someone, and they came back to me and they're like, "Hey man, I like so appreciate you doing this. I'm going to give you this one thing." They gave me something in the form of equity that could, I'm not even kidding you, could be worth $5 million in 5 years from now, just for raising money for them. The only reason I even know this person is because I was at an in-person event and I listened to what they had to say and I offered value to bring to them. And it has now come back to me in 5 years from now. It's going to be like, holy moly, that one contact, that one person I was willing to work with instead of being all by myself and keeping everything for myself, that one person could absolutely change the trajectory of my family's generational wealth, right? That's just one contact.
It's
So
like the who not how model, right?
oh my, oh, dude, for sure. And that's what I'm going back to when I said I know a lot about a little, and I know a little about a lot, and like that's where I want to be, right? Because I don't need to spend time focusing on learning every single thing about every single thing when I have other people out there who know it. So, like I
Right.
talked about my buddy Mustafa. Like, do I need to learn how to be a better business consultant? Like, no, because I have Mustafa. So if we were to come into a company who needs, a consultant and you're going to do some sort of consulting for equity deal, like I could come in to get, say they're offering like 5% equity in their company to help right their ship. That's a sinking ship. I could come in and get 5%, or I could bring Mustafa in. He could get 4% and I could get 1% for connecting the two, right? Like I don't need to know everything and I don't need every single thing. I'm just trying to help people and provide value where I can. It always comes back to you. And I also understand I'm in a position where I luckily, like when you have some capital, you get around other people that have capital, and that's a really powerful thing. Not because I want their money, but because people who already have money are typically at another success level that I'm not at, right? And it's just like what every smart mentor says, like get around the people that are doing the things you want to do. And it's true, but don't get around them and then be a leech. Get around them and see how you can help them without asking, and then the value will always return to you. Whether it be now or in a year from now. Like I had a guy, this is another just easy example. I had a guy who was trying to close out a syndication, and he had one share left to sell. And if he didn't sell it that day, he had 3 hours. His syndication was going to fail and he was going to lose his asset. Luckily for me, I was in the spot where I could buy that last one. I didn't want to. It was a terrible return, but it was a relationship play. And I bought this one last share. It was not a lot of money. Time went by. It built our relationship even more. I helped him. And a year after that, he reached out to me and said, "Do you want to co-GP on this multifamily deal with me?" I was like, that was just a simple example of me just doing one thing to help him. I didn't expect anything in return other than the returns of the actual asset that it was providing, which, like, again, were really low, but I didn't care. And in return, like a year later, he asked me if I want to co-GP with him because he knows that I came in and I was a giver and I was a doer and I helped him. I provided value without him having to ask. That's a very simple example of it, right? But I think that's a hugely underrated thing that people can be doing out in the world, especially when you go to in-person meetups. Go to in-person meetups. Every opportunity I come across that is like an actual gold opportunity for me and for the other person comes from in-person meetups. Doesn't come from Zooms, doesn't come from podcasts, doesn't come from email, doesn't come from text. It comes from face-to-face interaction with people. Go to in-person events. I'd say it all the time to people. Every single time I'm anywhere, I just got to say it again. Go to in-person events. That's where the magic happens, man.
What do you recommend people do at events instead of just sitting in the corner or just watching stuff and
Yeah. Yeah. So that's a great point, sitting in the corner. So I used to be that person where I was nervous going to meetups. Sometimes I'd pull up to a meetup and I'd get like anxiety and I wouldn't even want to walk in, right? And it was just repetition that got me to the point where I was comfortable. And being super transparent about who you are and what you have and what you need. Do not go into some sort of event and lie about what you know or what your experience is, right? You're going to get exposed, and then you're going to be the clown of the room and no one's going to work with you, right? I go into events, and I used to go into events when I was newer, and I would say, I have no idea what I'm doing. I'm here to listen and try to learn and start connecting dots. It takes time, man. Like whether it's, no matter what you're doing in life, it takes time to learn stuff, right? But taking action is really where you kind of get the forced learning, right? And going to an event in person is a form of taking action, really, in a way, because you're going to go listen to other people talk. You might learn some stuff, but like really, education without action is just entertainment. So like, don't read books, listen to podcasts, go to events and listen and not actually do anything about it. You have to do stuff. And I know there's a big fear within the world of everybody. I'm afraid of stuff too, right? Fear is by far the number one thing that keeps me back on anything and everything that I do. But my mindset has grown to the point now where I'm like, if you don't take some sort of risk, you're not going to have a reward. You can't just stay safe forever. You can't, like I said in the start of the podcast, you can't save yourself to wealth, which is like the easiest, safest thing to do. Like, I'm controlling my own money in my bank account. It's not making any money though, right? You're losing money to inflation. Like, you're not making money. You're actually losing money. So when you go to events, I still to this day, people will ask me questions and I talk a lot. I'm not sure if you could tell, but I talk a lot. And I like to just listen. I walk up to a group of people, even if I feel super uncomfortable, you just have to get past that. You have to get past that. Back when I don't drink alcohol anymore, but I used to drink, not very recreationally. And I went to a Bigger Pockets conference in New Orleans in 2021. And I was by myself. I didn't know anybody. I was super anxious to talk to people because I just like saw these people that appeared to be doing cool things, right? Which is another side topic I got to get to in a second here. Appearance is not always reality, right? And I was like, man, I just have to work up the courage to just talk to someone. And so I like went to the bar and I got 2 glasses of wine and I like chugged 2 glasses of wine just to like get the edge off of me, which I would not recommend doing, by the way. And I'm not advocating for that. But at the time, that was just how I kind of overcame my anxiety, fear at the time. And I went up to a random person who was standing by themselves. And I just started a conversation. And I was like super awkward. And just don't be afraid of being awkward. Like, who cares? It's okay to be awkward. Like, we're all awkward in our own way. Trust me.
Right.
And like, I just walked up and I was like, hey, I just saw you were standing by yourself. I'm here by myself. Like, can we chat? And that was it. And now that person to this day is one of my best friends and is a lender and brings deals to me and I bring deals to her. And like, we help each other learn. And like, we have an incredible network of people, all because of that one person I walked up to. Now I don't need any sort of substance to make me feel comfortable to talk to people. I actually like getting uncomfortable. So now it's easy for me to say because I was a street cop for 10 years and I was a detective for 6 years. Like, talking to people is kind of like my thing, right? I can go talk to anybody. 2 in the morning, crazy person on the corner, I can go talk to them. I can go have a conversation. I was a coroner detective for a while. I had to go talk to loved ones who family members just passed away, right? And I could talk to anybody in any circumstance. So that helps me for sure, right? It gives me a leg up. But going back, just be transparent about who you are and what you're doing and listen. I have connected so many dots as my knowledge and like what my goals are just by listening to people in a room. I'll go up to join a circle and like just be awkward. Say like, hey, can I join you guys? Sure. And they may ask you like, who are you? Who are you? Oh, my name is Wes. And I want to be a real estate investor. I'm just not quite sure my path yet. So I'm just here to listen. What do you do? Like, don't talk about yourself. Like, put it back on them. Make them talk. I just always want to make other people talk to me, because when they talk, I listen. And I don't sit there and I think of ways to one up them with stupid stories. Like, dude, like back in like the police world, like if you sat around like with some beers with your buddies after work every day, it'd just be, war story after war story, and everybody trying to one up each other. Like, oh, well, I had this, blah, 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 blah. Oh, well, I had this one. It's like, shut the fuck up and listen to what other people are saying. Don't tell anything. Don't talk about yourself unless I ask you a pointed question, and then be super honest and transparent. And people may ask, like, well, what do you have and what do you need? And you could be like, I don't know yet. What I have is myself. I'm here. I'm trying to learn, but I really just don't know my path yet. Like, that's just being honest. Be brutally honest about who you are and what you have and what you need. Because again, if you make up some crap about what you're doing, it's going to get exposed, right? And then people are not going to want to work with you. It's really is. That sounds like super simple to say, but like that's just how I started. I just went to every event. I listened. I gained so much knowledge by listening to other people who were doers. It really helped me figure out like what I did and didn't want to do. You learn from mistakes. You learn from success stories, but it takes time. It took, I was going to events for about 8 months before I really kind of had paused everything I was doing. And 8 months of events, just listening and learning and absorbing. And it got to the point where I was like, man, I need to do something with this. I can't just keep listening. And that's when I joined. I went to one last event in Boise, Idaho. AJ Osborne, the Storage King. AJ and Brittany Arneson have an event in Boise every June called the Circle event. And Pace was there. And I heard Pace talk, and I didn't even really know I followed him on Instagram, but I didn't really know anything about him. Like, creative finance was kind of the scary, unknown world to me. And I was like, man, I need a kick in the pants to like just get back into this stuff, because we had just moved from California to Arizona, so everything was just kind of on pause. And I joined Subsu. I was like, I'm just going to join this mentorship, as I called it, the community, and see if it kind of helps kick me in the butt. And holy moly, did it ever! Now I joined, and I still had to do stuff, right? I still had to take action, but all I did is I just started reaching out to leaders in town. I'm like, here's what I have. This is what I'm interested in doing. Like, do you think that I could, is there anything, I had straight up, like I had just sold our last house in California. I was like, hey, I have money and I'm a lender. I want to lend on deals. Do you have any deals I can lend on? That's what I started saying. I didn't say, do you have something I can help you with? I said, here's what I have. Can you use this? And sure enough, Ingrid Hernandez was my first deal in Sub2. She called me. She's like, hey, I've got a fix for flip deal. And so I lent the whole thing. I lent the purchase price and the rehab. And it was a great deal. We did like a partial profit split plus deferred actual interest payments. And she was an amazing person to work with. Totally crushed it. And thanks to Ingrid, kicked me off on this journey. And then it was just like rapid fire, man. I went crazy. And I made a lot of mistakes too, which was fine. I still have a lot of money out in the world that I'm like, some of it I'm like, I don't know if this is going to come back to me or not here, but we're working on it and trying to see things through here. But
did money that you had put into a project come back like unexpectedly before, or no?
Yeah, actually, so I lent money to Pace, and it was supposed to be like I can't remember what the term was. And lending to Pace was really just, I knew that I was going to get more than the return on money from him, because and it was, he flew all of us that lent on this deal to Dallas for a weekend, put us up in a hotel, and gave us like a mini masterclass with Vina, Jetty, and Pace, and it was like 10 of us in a room. And for 3 days, Vina, Pace, the 10 of us, we learned everything about multifamily. We met her whole team. They took us to different assets. Like, it was an incredible weekend. That was worth way more than the 10% interest only they were paying me, right? Like, way more. But then, like, I think it was supposed to be like a 6-month line, and they like paid me back in like 90 days. I was like, damn, bro. I was like, I don't want to be paid back. I want to keep making that income, right? But no, I wish there was. But no, there has been people I've worked with where things haven't gone as planned, and they are working on creative ways to get me my money back because they see that as the priority, which I appreciate, because it should be the priority. Your money in a deal is always the most important thing. I mean, if that's just the way you have to think, right? And like, if you're buying a deal and you're using someone else's money and you have no skin in the game, you're operating it. Like, yeah, that's a huge part of it. It's very important. But what's your risk? You don't have risk. If you don't perform, you don't lose money. They lose money. So the money in the deal is more important than anything else. And if anybody disagrees with me with that, come to my house and we'll fight about it. And I can explain, I'm just kidding. But yeah, so I wish there was. There's unfortunately times where you thought it was going to come back and it didn't. But you work on that as they come, and you reach out for help. And that's the best part about being within a community, is that there's people out there who can help you. Right? Like I have a meeting on Monday with someone who unfortunately lent money to somebody and it's not going well. And they made a very big mistake in the first place. They went and got a private loan from a bank to then lend to this person who is now not paying the loan or paying them back. And it's like,
Oh,
it's a
wow.
total mess, right? So what I offer to people is, if you're in a mess of a deal like that, reach out to me. I can try to help navigate you through it. I haven't ever gone through the litigation process of getting money back, so I can't speak from my experience on that. But I understand enough of the framework of how it works and what you're going to have to do and where to refer you to, like the proper channels to refer you to, that I can help with that. But most of the time, I like to try to help people before they make that mistake, right? Like, let me be your second set of eyes on the deal. Like, if you have a deal you want to lend on, you need a second set of eyes. You always need a second set of eyes until you are confident that you know what you're doing. Even dude, I've been doing this for 11 years and I have done a ton. I've done almost 100 lends in the last 2 years. I feel very confident in what I'm doing. I will still get a second set of eyes, because why not? Like, why the hell not? Like, what doesn't hurt anybody to have a second set of eyes. People come to me with sorry, I'm out by my barn and there's a bunch of flies out here. People come to me for a second set of eyes. I'm very happy to help, because a lot of the time it is a shit deal and they're going to lose money. And I'm very grateful they came to someone to look at it, because they just didn't fully understand it. Right. So yeah, if you need a second set of eyes on the deal that you want to lend on, that's, I've gotten to the point now where like I'm so busy with everything that I do that I can't just hop on calls with people anymore to like help them. Like I got a lot of new people who reach out and they're like, hey, I want to pick your brain, which I know people frown upon that phrase. I don't have a problem with that phrase. It's kind of silly, but I understand. Like, if I could get free advice from people who are way ahead of me right now, like, I'd love to do it too, but that's not the way to go about it, right? Try to bring some sort of value and I can help you out. However, the one thing I do always offer is, if you have a deal you're considering lending on and you want a second set of eyes, I'll happy to look at it for you, because it'll probably take me 5 minutes max of my day to tell you whether or not I think it's a good deal, or to tell you what questions you need to find out, right? That was yesterday. I was like, hey, you need to itemize contractor estimate of all the expenses, because its rehab seems too low. You need to see comps that are within 3 months, not a year. They're using comps back for a year. You can't use comps a year ago. That's not how comping works, right? So I can just give little tips of advice like that. Or if you have a business that you're looking at investing in, or you have a business that you're buying in, those are the kind of the 4 things that I can help with right now. But other than that, I'm just so busy. I just don't really, I can't talk to like brand new people anymore unless you're at an in-person event. When I go to in-person events, I tell people I tell people all the time in Arizona who want to talk to me, I'm like, hey, I'm going to this event Wednesday night. It's a meetup with Pace. I'm going to be there. I'll be there for 4 hours. You have me for 4 hours. I have nothing else I'm doing. So any questions, anything you want to talk about, come there and ask me. If you're brand new and you want to, sure, come ask me questions. I don't know a lot about wholesaling. I've done like one wholesale deal on accident pretty much, but I don't know anything about wholesaling. Like, I'm not the person to talk to about that, right? If you're brand new to real estate and you're trying to find your path, probably not the guy to talk to about that. Now, if you have capital and you want to lend, or you want to do mortgage methods, you want to buy businesses, you want to flip land, you want to do fix and flip stuff, I know stuff about that. I can help you. But those in-person events, like, that's where you have unrestricted access to me if you want to talk to me. And it's not like I'm some special person. I just do a lot of stuff, right? That's what makes me special, is I do shit. A lot of people don't do anything. Or let's go back to, hold on, I didn't mean to say I'm special. That's what makes me be able to actually give advice, is because I've done stuff. I'm not special. Other people have the appearance that they're doing a lot of cool stuff, when in reality they're not. So just be careful. They're not even gurus, but there's a lot of like fake people out there who are like, I'm doing this, I'm doing this, I'm doing that. And if you come to reality, it's like, no, you're not. You're not doing any of that. You're trying to do it. Stop trying to say you're doing this, right? That's the whole transparency thing. Like, be honest about what you're doing and what you know, because if I find out that you're claiming you've done all this stuff, and then I find out like you haven't done any of it, you're completely discredited.
Right.
Like,
it's a bad look.
Be honest.
It's a real bad look.
Bad look. Yes. And I'm never going to work with you. And I'll make sure my network never works with you. Not because it's a vendetta, but because that's a red flag. Right. So Anyways,
So if somebody does have a good business and they send it to you, right?
yeah.
Um, what kind of underwriting do you do? Do you underwrite it on your own terms, or are you able to hop on a Zoom with somebody that brings you the deal so they can learn from you the underwriting, or how does that work?
So that's funny you asked that because I have two people who want to learn more business underwriting with me. And so I told them, I said, hey, when I get, tax returns, P&Ls, balance sheets, when I get these sent to me on a deal that someone wants me to invest in, and I'm going to underwrite them, let's jump on a Zoom. We'll do it together and I'll explain it to you. I don't have time to just help anybody with it, but if I'm doing it myself, I will offer. So that just gave me an idea that maybe I should, someone else recommended this to me. Maybe I should just have an open office, once or twice a week when I have, an hour or 2 hours where I can just throw it out to the world. Hey, open office Zoom, come on in. If you have questions, Q&A with Wes. I don't know that much stuff. It's not going to be as good of a Q&A as with people who are all-stars like Pace, but I might be able to help with something. Who knows? And also I can, go through how I underwrite, going through a set of P&Ls, right? Now, if you're trying, so like I said, I don't want to be sent into businesses that are just looking for buyers because I'm not the buyer. I want to be talking to people who are trying to buy this business, right? If you came across a company and you're like, I want to buy this, or you have someone else, hey, I found this company. This, Roger over here wants to buy it. He's starting to go through the process. He's talking to seller, et cetera. He's going to need money for it. And then I'll take a look at it. But I won't look at it unless there's already a buyer owner involved. I just don't have time to.
Perfect.
Yeah.
That sounds
But the
good.
whole
That sounds good.
the whole open office idea, that would be kind of cool to do.
That would be
I get
really
so many
good.
people.
You could even do
Sorry,
an
go ahead.
unlisted YouTube. So people
It's
you
true.
can something like that.
Yeah, I should see, man. I'm so bad with the social media stuff. Um, I'm so grateful that you and other people have these podcasts because I have a lot to say and have a lot of stuff I think I can help with to people, which somehow in return I'm sure will always come back to me, like I said. And I just man, the whole personal brand thing. I just don't. It's hard because I'm not. I don't want to say I'm not looking for leads through social media because that wouldn't be accurate. Because of course I want to see anything and everything, and if I'm not vocal about it, then who knows what I'm actually doing, right? A majority of my whatever amount of followers I have on Instagram, they probably don't know that I invest in businesses, right? I should put that out there. I'm just my Instagram is still just me, life, my family, because that's what I like. That's what I like. That's me. That's being authentic. I hate things that are inauthentic and not organic. I like everything to be organic. That's just the way I am. And I know that I'm definitely leaving potential opportunity on the table by not doing more social media stuff. I just have no desire to do it. It makes me unhappy. And I'm not going to do something that makes me unhappy. I'm already having success doing what I'm doing the way I'm doing it. And, that's so going back to that, the whole point of that was unlisted YouTube or unlisted videos. That's someone else had recommended to me. That's actually a really great idea. I'm going to look into that. Thank you, Justin.
No problem. Hey, and if you want, I don't mind setting up something like once a week or something, and bring some make a form where people can submit certain deals, and then we can look at them, and then you can pick certain
Yeah.
ones to underwrite or whatever.
Yeah.
I'm down to help you out with that because I
Okay.
know you're probably busy.
Yeah, that'd be awesome, dude. I would let's talk more about that after this.
Sounds good, man. Hey, so before we close, because I know we're 19 minutes over, what
Yeah,
is
sorry.
what is your top book that you recommend the viewers?
Top book. It's you already brought it up early in the podcast. Who Not How.
Really?
Every single thing I look at, the old me would be like, I can't do this. Right? That was it. I got to spend a weekend with a billionaire recently. Let me tell you something. Billionaires' mindsets are a whole nother level. A whole other level. The only reason this dude is a billionaire is because of his mindset. Straight up. That's very simplifying. I know it's not that simple. But the reason he's gotten to where he's gotten to is because he leverages who, not how principles, and his mindset is absolutely uncapped. He can do anything he wants. And I can't say I'm anywhere near that level of it yet, but who, not how is what started me to get over my fears of, oh, I can't do that. I don't know how to do it. Newsflash, you don't need to know how to do it because someone else does. And that comes into the whole, I want to do everything by myself and not have a partner type bullshit. Like, okay, then you're never going to grow. Like, have fun by yourself. I'm telling you, I did it for 20 years. It didn't get anywhere. If you are a firm believer in the who, not how principles, and you know that you can do anything you want, because it just goes back to the whole, you can have a whole grape or half a watermelon. If you have a deal, say it's an incredible deal, but you don't know how to run it or operate it, dude, all you got to do is go find the people that do. You may end up getting 10% of this juicy deal, but you're going to learn along the way. You're going to make amazing relationships. You're going to have people who come in who actually operate it and secure it, and you're going to get your money. You're going to get something rather than being fearful and not getting anything, right? So when I look at like my whole idea of having my own private equity consulting firm, like, do I know anything about how to actually set that up or setting up like a fund and dealing with SEC stuff? Like, I know a little bit about it, but I really don't know a lot. And the old me, if I'd been like, someone wants you to create a fund for private equity for business investments, I would have been like, no, because I'm afraid. I have no idea what I'm doing. Well, now, thankfully, partially thanks to that book, and then partially thanks to our community pace, the amount of mindset growth that as a whole has given me. Now I'm like, hell yeah. Like, when do we start? Do I know what I'm doing? No. But I know who I can call who knows what they're doing. That's all that matters. Who, not how. I mean, dude, it's such a powerful mindset to take on. And it is such a simple concept. Like, you don't need to know how to do it. Like, there's people out there who do. It's that simple. It's really that simple.
There's people that like master the art of closing, and they're like, all right, I just mastered this. Now I gotta master underwriting. And then they just put that on hold and start doing underwriting. They're like, all right, I know these two now. Now I need to do TC work. And then
Yes.
it's like crazy.
Dude, oh my gosh, TC work. I'm like, someone asked me, they're like, oh, your wife's an attorney. Like, is she going to be your TC? I'm like, no. Why? Why are we going to like learn some whole new skill set when I can just have someone else do it for me? Oh, it costs money. Oh shit, it costs money. Of course it costs money. But like, this is just the world we live in. Like, change your mindset around money, change your mindset around partnering, change your mindset about growth. And like, man, you can really do anything you want. The amount of growth and the path, the trajectory that I've been on for the last 2 years has been unbelievable. And I'm so grateful. I'm just so grateful for everything that has happened and all the other people that have helped me get here, you know?
Where do you see yourself in 3 years from now?
3 years from now. So my wife will be retired in 3 years from now. We'll own a 30-acre plot of land in Tennessee to go have our own shooting range and potential hunting land on. And we will, at that point, we might own a house in the Cotswolds. Cotswolds is like the English countryside out to the west of London. Those are all within the 3-year timeline. A vacation house in the Cotswolds in England. Near there's a clay pigeon shooting center out there that we were big fans of. We like shooting, by the way, and property in Tennessee. And, I mean, who knows? We may even move to Tennessee. I don't know. I love Arizona. It's great. I love a lot of things about this state, but I also want 30 plus acres with some trees, and don't really have that here unless I go up a little bit north, which I can do. But Tennessee is my favorite state in the entire country. I love Arizona. It's number 2. I lived here for a reason. Stay closer to family. That's in California for now. But 3-year wise, I think those 3 things could all be a possibility. That's just personal, right? Professional wise, in 3 years, let's see. So in the next 12 months, my goal is to have equity in 10 companies. So in 3 years, yeah, that's just a short-term goal. I haven't built out. I have like a Oh, actually, here's my other goal is to my wife's going to retire so we can shift my kids to a homeschool model. We want to homeschool our kids. They're in a classical education charter school right now, which is great. It has nothing to do with public school. I think our public school system in this country is completely broken, and I hate it. And we want to shift them to a homeschool model where we can bring in special educators for certain topics, but also have them start learning about entrepreneurship and investing and this whole world, and kind of see how it goes from there. Right. So those are all within the 3-year timeline.
How can everybody reach out to you? What's the best way to get a hold of you?
So crazy enough, Instagram hides every single message that is sent to me. Like it's crazy. And I try to go into my, hidden folder, like when I remember, but I just never remember to do it. And then there'll be like 100 messages in there. And I feel like a jerk because I didn't respond to people. But also at the same time, I'm probably not going to respond to a lot of people because a lot of people are just like, hey, I need money. I'm like, okay, delete, right? I'm not like, it's not how you find a private money lender. So like, that's my Instagram handle on the page that I put up there, Wesley Grant _21. You try to reach out to me there, or on Facebook. I think I'm just Wes Grant on Facebook. Facebook Messenger sends me all the messages. I see all those messages. But those are really the two best ways. If I know you on a more personal level, then you might get my phone number at some point. But I get blown up by so many people, random people I don't even know, that it's just I have to say no to so much stuff now. It's just, which is a great place to be, and I want to be able to help people, but I'm so busy with so much other stuff that I have to say no a lot, which has been very powerful and very helpful.
Love it, man. Hey, I appreciate you coming on today, man.
Yeah, bro. Thanks for having me, Justin. This stuff is always fun to do. I know I talk a lot and ramble a lot, so sorry we went over 27 minutes here, but this has been fun, man.
No, it's been valuable, and I appreciate you, man. And we'll talk offline about the weekly thing, underwriting thing.
Sounds good, dude. All right, thank you, guys.
Later, brother.
Bye.